Despite what many people will lead you to believe, getting a mortgage is not complex. The process is not complex. People ask me frequently, what is a mortgage? And my answer is a mortgage is a really big loan. It comes down to three elements. That's credit, income, and deposit. Today, I'm going to talk you through the whole thing. So make sure you stay tuned all the way until the end that you can understand each element and how it can impact you. Hi, my name's Anthony Lindsay, and today I'm going to be talking you through the mortgage process. I've been in finance for over 30 years, so sometimes it can feel as if I'm talking in jargon or I'm explaining things too quickly to my clients. That's why I make these videos. Make sure you like, subscribe, and share. And if you have a topic that you'd like for me to cover, make sure that you reach out. So, getting a mortgage is going to come down to three basic elements, and that's credit, income, and deposit. It's not rocket science, it's not a dark art. So let's first look at my top tips if you're looking to get a mortgage. Don't obsess over rate. Understand what the term means in practice. So, in practical terms, be realistic and buy within your budget. Those things are very important, especially the one about the rates, because quite often clients will approach me and they're talking about rate. Rates are important, but you want to make sure that your monthly payments are affordable. The very first thing that we're going to look at today in my process, which is called CID, C-I-D, credit, income, deposit. We're first going to look at credit, and it's credit profile, not credit score. And I'll explain why. So what you want to do is make sure you get your credit report before you start the process. You can go to checkmyfile.com and get your credit report. The credit report that you get from Check My File will be the fully comprehensive 3-bureau report. This is vital, and it's vital that you get it from Check My File. I'm not an affiliate of theirs. I don't make any money off it, but it's the most thorough report that you will get, and it will give your broker everything that they need to find you the very best mortgage. When you look at your file, if there are any unsettled debts, anything that's outstanding, defaults, CCJs, anything like that, you want to address those things. Some things, it just makes sense to pay off. So if it's like £200, it's like, it just makes sense to pay it off. But we'll go into more detail on that in one of my other videos. Stop applying for new credit. So once you have decided you're going to get a mortgage, stop applying for new credit. Make sure that you're managing the credit that you have. Make sure you don't miss any payments. You don't have any late payments. If there's a dispute, so if something is in dispute and they're going to turn it into a default or a CCJ, pay it first, then dispute it. It will cost you a lot more money if you have an unresolved CCJ or default than maybe the £200 that you need to pay to BT. So when it comes to your credit, make sure you check your credit report. Make sure you're looking at your credit profile, not just your credit score. So make sure you don't have any late payments, missed payments, anything like that within the last 6 months or in the process. The next part of the equation is income. This one is shockingly one of the areas that people don't understand, but it's the fundamental area of getting a mortgage. How are you going to pay back if you don't have an income? So know what your employment status is. So are you full-time, part-time, 0 hours? These things are going to impact who will lend to you. Have you just started a new job and you're on probation? Some lenders will not lend while you're on probation. So it's important that you understand your status and you explain your status to your mortgage broker when you start the process. If you're self-employed, are you paid through an umbrella company? If you're paid through an umbrella company, you may find that it will limit the lenders that will lend to you, but you need to understand your structure. If it isn't documented, it didn't happen. And the only way of proving income really is what you're paying taxes on. So you should check your P60. As a mortgage broker, I always ask my clients to provide a P60 from the previous year that I can get a guide on what they actually earn, especially if you're someone who gets paid for overtime. So your salary, your stated salary might be X, but realistically, we may be able to demonstrate that you regularly work overtime and that can boost your affordability. Second incomes. We're all working really hard. I have a full time job, a side hustle, and a side hustle to my side hustle. So many of us have second jobs or we're in the gig economy. Make sure that that income is tracked properly. It can be validated, it can be proven. But if you are in full time employment and you have a second job that is a part time job that you have a contract for, make sure that your primary employer does not have a clause in the contract that requires that they give you permission for the second job. Because if you want that second income included in your affordability and there's a clause in your contract that says you need permission from your primary job, the lender will ask for proof or evidence that you've been given permission to work the second job. They'll also want to make sure that the second job is sustainable. It's not something that you've just started in order to be able to increase your affordability. Lenders want to lend ethically and they want to make sure that not only do you get the mortgage, but you're able to stay in your home. So the affordability checks that are up, they're to protect you from yourself. So we've gone over credit. We've now talked a little bit about income. Now we're going to talk about deposit. Big topic. The deposit thing is a really big topic because most people struggle to come up with enough money for a deposit. If you've watched any of my videos, you know what I'm going to say next. Stop talking about percentages. So don't go to your broker and say, I have a 5% deposit. I have a 10% deposit, because it kind of demonstrates that you don't understand math, unless you have a very specific house price that you're going after. But either way, it's best to let your broker know how much money you actually have for your deposit. Don't lie, don't make up a number, don't guesstimate. The reason why it's important that we understand the actual amount you have and can demonstrate that you have through bank statements is because that can impact the product that we give you. So if you have a £50,000 deposit and it's in a bank account that you can prove it, it will be better than just saying, well, I have a 10% deposit or a 5% deposit. Because most people, when I ask them, how much does the house you would like to live in cost? They'll give me a range. They'll say, oh, well, it's 450 to 475. So the simple math would indicate that the 10% of 450 is different than 10% of 475. So let me pause on that point. I've said earlier, make sure you're open and honest with your broker. If you don't feel you can be open and honest with your broker, then you shouldn't be working with them. If you feel you have to hold things back, or if you feel that there's a circumstance that they may not want to hear, and you're not open and honest with them or don't feel that you can be, you shouldn't be working with them. Brokers are there to support you. And we'll be talking a little bit about specialist lenders in a minute, but there's a lender that will lend for most circumstances. And in most cases, it's very rare that I'm unable to get someone a mortgage. Usually the issue is that I can't get them a mortgage for the house that they want to buy, which is a completely different thing. Now, you may view that as the same thing, because you might say, well, if I can only get a mortgage for 200,000 and I live in London, then it's as bad as not being able to get a mortgage. But words do matter. And it doesn't mean that you can't get a mortgage. It may just mean that you need more income or more of a deposit. The other thing that we're going to look at is, where does the deposit come from? If you have what I consider a cultural savings scheme, so as someone from West Indian background, a lot of people that came over during Windrush did something called a pardner. Don't do that. Every culture I've come across has one of these cultural savings schemes that's off the books. Don't do it. Just don't do it. If you're looking to save money for your deposit, get a high interest savings account. If you're on a 5-year plan or more than a year plan, look at a lifetime ISA, because the government will give you up to £1,000 a year, interest free. But make sure you read through the information about the lifetime ISA, because if you don't use it for the right purpose, it can have huge penalties. But just to stress, your deposit needs to be traceable. Like, if the bank sees that money just fell into your account out of nowhere, they're going to want to know where that money came from. They're going to do anti-money laundering checks, and they just want to make sure you can actually afford the property. There are some deposit schemes or some mortgages that you may not need to come up with a deposit yourself. So a concessionary mortgage, I've done a video about that, is where your landlord or a relative sells you the property for less than the value, and that difference becomes your deposit. There's also right to buy discounts and gifted equities. So if you're looking at any of those schemes, or if you don't have the money, but you're trying to explore ways of having a lower deposit, make sure you reach out to me or speak to a mortgage broker. There are a lot of tools in place. I would caution against anybody buying above what they can actually afford, because you may need to look at it like this. The first home you buy or the next home you buy may not be your forever home. Make sure it's something that you can afford, you can maintain, and it may be a stepping stone to the next property. So we've gone through credit, we've gone through income, and we've gone through deposit. And the reason why I go through it in that order is because if we understand each of those things and those basic elements, and you're able to articulate those things to your mortgage broker, usually once we have that, we can figure out how much you can borrow. So when I do a initial consultation with a client, within the first 7 minutes, I tell them, based on what you've told me, this is what we can do for you, because I want to manage your expectations. So if you've come to me and you are on a £25,000 a year income and you want a £600,000 mortgage, I'm going to let you know within the first 6 or 7 minutes that that's not realistic. But I will tell you how much we can get you now and how to get to that other mortgage amount. So I'm not here to crush anyone's dreams, but I am here to give you the honest, clear, factual information on how mortgages work. If you want to network with other first-time buyers, if you want to be able to talk to mortgage brokers and lenders and specialist lenders, depending on when you're watching this video, make sure you register for the East London Property Expo. It's taking place on March 21st in London, March 21st of 2026. It's free to attend if you just want to attend the seminars. There'll be hundreds of people. This is our 6th annual. You won't be disappointed. The East London Property Expo is a great place to learn, network, share, and ask questions. Asking questions before you start the mortgage process is the best thing you can do. As I always advise, you should start looking at mortgages and you should start talking to a mortgage broker at least 6 months in advance of when you think you're ready. My name's Anthony Lindsay, and I do these videos to explain concepts, give information. These videos are not intended to give financial or legal advice, and they're certainly not intended to replace speaking to a qualified professional that you can explain your circumstances to so that they can find you the best product for you. We'll be finishing up with a few more hints and tips, so make sure you watch until the end, and make sure that you like, subscribe, and comment. And if you have a topic you'd like for me to cover, be sure to put that in the chat. They say that my people fail because of a lack of knowledge. There's no reason to not know. I've written a book called A Mortgage is a Really Big Loan, and we're also going to be presenting the East London Property Expo March 21st in London. It's free to attend. We will have Q&As every month that you can ask questions and understand what the event's about. Make sure you scan the QR code. I've been in finance for over 30 years. And so when you speak to me, I'm able to give you a breadth of information. I've done wealth management, I've done collections, and I also have done lending. And one of the things that I know is most people feel that if they are a vanilla client, which I'll explain in a minute, that they don't need a mortgage broker. I'm going to tell you why you are wrong. Make sure that you watch till the end. Make sure you like, subscribe, and be sure to put something in the comment that more people can see my videos. Even as an experienced banker with more than 20 years at the time experience, I always thought because I had a full-time job and had been at my job for a while, had no credit issues, and had a decent deposit, I would not need a broker. That description is what we call a vanilla client. This is a client that could pretty much go anywhere and anyone would lend them money. Most people don't fall into that because life happens and we're human beings and sometimes we miss a payment. But let me first explain what a vanilla client is. And if you're not, you still have hope because we have specialist lenders. So a vanilla client in the UK tends to be someone with a UK passport. So you have a UK passport, you can produce that passport, and the passport is in date. You have no credit issues. You've never in your entire life missed a payment. You've never had a default. You've never had a CCJ. You've never had anything that would be on your credit that would be adverse. You're full-time employed, PAYE. That means that you have a contract that states how much you get paid every year. And unless you do something really bad, you have your job. It's not a 0 hours contract. You're not a part-time worker. You're not a contractor. You are a full-time permanent employee with benefits. It states the amount that you make on your contract. You're not on probation. And the reason why we say PAYE is because as a PAYE employee, if you miss a day from work because you're sick or you miss a couple of days, you get signed off, whatever, you still make the same salary. So we need to know your PAYE, you make the same amount each month. And you are purchasing at a low multiple of your income. I always use 100,000 as the house price and 25,000 as income because it's easy to do the math. So let's just say you are on 25,000 pounds a year. I always advise people in order to manage their expectations to just consider 4 times your salary, the amount that the bank will lend you. I'll break that down. So if you're on 25,000 pounds a year, you multiply that by 4. And for those of you watching, you know it's 100,000. That's how much the bank will lend you as a mortgage. Let me caveat that. There are higher multiples. I know that. I've been doing this for a while. But I always try to manage around that on the first conversation because it's easier to then say, well, actually, I found a lender that will do 4.25 or 4.75. But everyone pretty much will do 4 times your income. So 25,000 a year, 100,000 pound mortgage. But wait, that's not the property price. The property price is how much the bank will lend you, so the 100,000 plus your deposit. So if you have, let's just say 20,000 pounds in an account that you can prove that you have, then you can buy a house for 120,000. I'll go through this slowly. You have 20,000 pounds in your savings account. You find a house that is 120,000 pounds. You have an income of 25,000 pounds. That means when you buy that house, you will pay 20,000 pounds down. So that's your deposit, which will mean the bank only needs to lend you 100,000 and your income multiple will support that. So a vanilla client is someone who has good credit, PAYE, UK passport, and the multiple of what they're looking to purchase does not exceed, as a rule of thumb, 4 times their income. But for regular people like us, let's talk about specialist lenders. A specialist lender is a specialist mortgage lender that will lend to those who have circumstances that don't align with standard lending criteria of traditional high street banks. These lenders often offer more flexibility and consider factors like poor credit history, unique income situations, or other complexities that high street lenders might not accommodate. So a specialist lender will look at you as an individual. They'll see, does what you're explaining make sense? And are they willing to take on the risk? And contrary to what some people think, a specialist lender is not some guy in the alley. It's not some guy working from Starbucks. It's a bank. And so you have the same protections and they're regulated by the exact same people. It just may mean the interest rate's a little bit higher. And in most cases, if I place a client with a specialist lender, we do it over a short period of time that they can turn around whatever the circumstance was why they went to the specialist lender. And then when they go to remortgage, they can always search for more banks. So specialist lenders, if used correctly, are a great solution. You shouldn't shy away from them if that's your only option, but it shouldn't be a long-term solution. You should never be with a specialist lender for remortgage after remortgage after remortgage, because if you are, that means you're doing something wrong. That means you haven't cleaned up your credit, or you haven't resolved whatever the issue is. Now, it's different if you're an expat or there's a circumstance that is not related to credit. That's a little bit different, but specialist lenders are fantastic. But your broker, when you speak to your broker, will be able to talk you through all of the options, and they'll always put your needs first. If you're getting value from this video, which I hope you are, make sure you put a comment in the comment section, so you can just say remortgage or mortgage or whatever. Or if there's a topic you'd like for me to cover, please, 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 please put that in the comments. Make sure you like, subscribe, and make sure you share this video that more people can get value from what I do. Okay, so we've talked about specialist lenders. We've gone through credit, income, and deposit. I think everybody wants to understand how mortgages work. And it's important to understand how mortgages work if you are planning on getting a mortgage. Like I always say, what you want to do is make sure and look for a mortgage 6 months before you think you're ready. Let me talk you through the mortgage process. So the mortgage process is not a dark art. It's not a complicated thing. What I do think happens a lot of the times is when people go for a mortgage, they're emotionally tied, which you should be because you're buying a home. But the facts are the facts. It's math. It's a simple process in the sense that every process, every part of the process can clearly be explained, which is what I'm going to do right now. So the very, very, very first part of the mortgage process is an affordability assessment. Now, as a broker, what I do is I actually do a mortgage capacity report. So I'll send you all the information about our discussion. So I'll let you know what your income multiple is. I'll let you know which lenders would probably look at your deal. But the very, very first stage is for you to speak to a mortgage broker. In all of my videos, I do say to speak to a broker. Why? Because you're going to have more choice. If you go directly to your bank, as amazing as the bank manager may be, I was an excellent bank manager, or as amazing as the mortgage staff may be, they can only talk about their product. So that means you're going to be limited. Whereas if you go to a mortgage broker that has been referred to you by someone that you know and trust, and the mortgage broker is also someone that you can trust, they're going to put your needs first. They're going to explain the process, and they'll take a lot of the stress out of the process. So first step, affordability assessment. That's when you talk about your credit, income, deposit. That's when you ask questions. You tell them what you're trying to accomplish. You confirm with them the use of the mortgage. Are you trying to get a buy-to-let mortgage? Are you trying to get a residential mortgage? Do you plan on living there for 5 years? Is it your forever home? All of that, that happens in the first call. Then, based on that information, you will get an agreement in principle. If anyone has already started looking for a home, you'll know that many estate agents will ask you for an agreement in principle before you can make an offer. Let me just caution everybody, because most people don't fully understand this, and this is not a dig against estate agents. Some of them do a fantastic job. The estate agent is not your friend. The estate agent works for the seller. The estate agent's fiduciary, and I always say it slowly because I don't want to mess it up, their responsibility is to get the seller as much as possible. This is why during the negotiation stage, if you've ever negotiated with an estate agent, you've probably heard this. I don't think the seller's going to take that. They've already had a higher offer. It's their job to get the seller as much as possible. This is why, if your broker is like me and they offer a negotiation service, you should consider it. I do this every day. I'm going to be better than you. Okay. No matter what your job is, and you may be smarter than me, you may even be making a higher salary than me. But if you're not negotiating with estate agents and sellers every day and have been doing it for 30 years like I have, you're not going to be better than me. So your broker will be a better negotiator if they offer that service. So back to the agreement in principle. If you come to my firm, we do all of our due diligence and checks before we do an agreement in principle, before we charge you a penny. And the reason why that's important is a lot of people come to me because they got an agreement in principle online or through Zoopla, or these online portals that don't do any type of credit criteria checks. They don't do any kind of validation. They do a light credit check, maybe. So they've got an agreement in principle printed out from a website, and then they do the hard work of finding a property. They go to make an offer. The offer is accepted within what that agreement in principle says. And then when they try to convert it to the next stage, so that's the valuation and underwriting, the broker or the bank comes back and says, you've been declined. This causes a lot of problems, but it's easily resolved. You should never, ever, ever, ever get an agreement in principle that is not validated by a broker. So what we would do is, before we would get you an agreement in principle, we're going to check your pay slips, your bank statements, confirm that you have the deposit. We're going to look at your ID. We're going to do the full due diligence, check that against the criteria with each lender, give you a range of options, go through the illustrations. We do all of that, and we haven't even charged you. The reason why that's important is because you want to know that you are being placed with a lender that will not only produce a piece of paper, the agreement in principle, but also make you a mortgage offer. You're not coming to a broker for a mortgage offer. You're not even coming to a broker for a mortgage. You actually want a home. So anything that's going to prevent you from getting that home, getting those keys, you should avoid. And getting an agreement in principle online from a bank or in branch with a banking advisor can be problematic. Trust me, I've managed the 3 big brands in the UK and 2 big brands in the US. The motivation and the incentive is a little bit different. So make sure that the agreement in principle is validated, that someone has looked at your credit profile, looked at your employment contract, looked at all the things that will trip you up when it goes to the process of full mortgage offer. So affordability assessment, agreement in principle. At that point, evaluation will be done by the lender. And I stress this every video, it's evaluation, it's not a survey. 2 completely different things. Evaluation is done by the lender. The lender does evaluation to assess if what they think the value of the property is. A survey is done by the buyer to understand if there's anything problematic that might cost them money. Focusing on the valuation, there's 3 outcomes. It can come in at the value that you have purchasing the property for. The lender can think your property is worth more than you're purchasing it for. The key challenge and the thing that will cause an issue is if it comes in under value. This is also another reason why you should consider the broker doing the negotiation, that you don't end up in a circumstance where your offer is accepted for an amount that when the bank looks at it is higher than the bank thinks the property is worth. So once the valuation's been done, the underwriting is done. That's when the lender asks all the really intrusive questions sometimes. They'll ask for your 3 months bank statements, pay slips, P60s, proof that you can work that second job. If you're self-employed, SA 302 and tax overview for 2 years. They'll ask for all of that. That part of the process can take 10 business days. It's quicker if you're quicker, but it can take about 10 business days. Once they've evaluated everything, if they're happy, that's when they do the full mortgage offer. The full mortgage offer will have a date on it. So it will say it's valid from this date till this date. The full mortgage offer will also have the details of the amount being borrowed. If you've come to me, you've already seen that because we'd have done the illustration in advance. But once you get that full mortgage offer, here's some really, really good news. And I want you to make note of this. The full mortgage offer is somewhat a binding contract based on what you've entered and nothing changing in your circumstances. But let's just say you get a full mortgage offer and it's June. That full mortgage offer is good until January of the next year, and interest rates go down. Your mortgage broker, if it's me, will continue to monitor the market to see if that product, not that lender, because a lot of people will email me every day, oh, I saw that the Bank of England lowered rates or Halifax lowered rates. It has to be that product range within that LTV. So there's specific criteria. But if I find that the lender is able to offer you a better rate, I'll put you on that better rate with your permission. A lot of banks won't do that. Some will, but a good broker will also make sure that within that period, if a better rate comes out, that you get it. But you're protected if those rates go up. So if rates go up, and even if they withdraw that specific product, you're still protected for the period that it says on there. A question that I get a lot: what if my mortgage offer expires? So the house buying process takes 4 to 6 months from the moment of offer. So if, let's just say, there's a 6-month period on the offer and you feel that it's going to expire before the house is purchased, before you get your keys, the offer can be extended. However, if that product is no longer available, you can only choose from the products that are available. That could be a good thing. It could be a bad thing. It could be indifferent, because it could mean that the newer products are all at a higher rate. It could mean that the newer products are all at a lower rate, or they're about the same rate. I would say maybe 30% of the time we have to extend the mortgage offer. But if you're working with me, I stay in contact. I'm preemptive. I'll always let you know what the next 3 steps are, so it won't be a surprise to you. So once the mortgage offer is in place, for the most part, your mortgage broker has done his or her job. At that point, they will hand you over to the solicitor. If you're working with me, I'll get you a solicitor from the very beginning. I'll give you 2 referrals. I'll give you one that we regularly work with. I'll give you another one that's a top tier solicitor. But be mindful, if you're going to use your own solicitor, which there's nothing wrong with that, not every lender works with every solicitor. So if your cousin, your nephew, your aunt is a solicitor and they work at a firm and you want to use them, that's great. But make sure that your broker is able to check that that firm is a firm that the lender uses. So if you take my recommendation, you'll know 100% that it's a solicitor that works with the lender that we placed you with. The other thing to be mindful of: please don't pick the cheapest solicitor. Pick the best solicitor. That 200, 300, 400 pounds you think you're saving by going with a solicitor that has a dashboard and you can never talk to them, everything's done via email or via chat, you're not saving 300, because if they delay the deal, prevent the deal from going through, they're not thorough, or because you can't articulate what you're actually trying to say through a chat. That happens all the time. Like, you have a unique circumstance that you just can't explain it through a chat. If you go with that cheap solicitor, it may end up costing you more. Always look at service. And the other thing is, the estate agent will always encourage you to use their solicitor. I'm not saying it's a good thing or a bad thing, but know that there's a regulation and a guideline on something called conditional selling. 2 things an estate agent cannot do: they cannot make you feel as if you have to use their broker to proceed, or give preference to people that have used their broker. And they also can't do the same thing with an estate agent. They can't say you have to use our estate agent or give preference to people that use their estate agent. Similarly, as a broker, I can't tell you you have to use the solicitor that I refer. But one thing to know about my motivation: for the most part, I don't get paid unless you get the house. So I want it to happen quickly. I want it to happen efficiently. And because being a broker is a referral business, I want you to be over the moon. Today, I got a message from someone that wants to use my services because I've just completed a deal for one of their friends. That's what I like to see. Or people watch my videos and sometimes people reach out. With that said, make sure you like, make sure you subscribe, and make sure that you tell friends about this channel and put something in the comment. So once the offer is in place, the solicitors take over, they talk to each other. Your broker's really not that involved at that point, other than monitoring to see if a better rate comes out for that specific or particular product. Then you get an exchange date, then you get a completion date. You determine that with your solicitor. And I want to talk around that exchange and completion because this also will impact your first payment. I'll do a whole video on this, but just briefly, your first payment, so your first mortgage payment, the very first mortgage payment you get will not be the exact amount of your ongoing monthly payments. I'll say it again. Your first mortgage payment won't be the exact amount of your ongoing mortgage payments. It's usually or will be a number between one mortgage payment and two mortgage payments. Your solicitor can explain that, or I can explain that to you on the phone. So for your first mortgage payment, I always advise people put 2 months worth of mortgage in your bank account, prepare for the first mortgage payment. You will be notified by the lender how much the first mortgage payment is going to be. But just to help you budget, understand that it won't be the exact amount of one mortgage payment, but you can get it as close to that number as possible by talking to your solicitor about the exchange and completion date. How do you prepare? This is where the rubber meets the road. If you want to prepare for a mortgage, what you want to do is review your employment contract. So review your employment contract, understand what your status is. Are you on probation? Understand those things. The other thing that you want to do is tidy up your bank statements. Don't have random things, deposits or standing orders. Make sure that your bank statement is clean. You can account for all the funds that are going in and you understand what's going out. Limit your spending as well. So you should be trying to maximize your deposits. So tidy up your bank statement, check your credit report. But if you watch this channel, you know I always say you should be checking your credit report twice a year anyway. So you do that at checkmyfile.com. I don't get any money for referring you to them. But as a broker, our firm will only accept a credit report from Check My File. We don't accept the screen print from your bank. We don't accept anything else because Check My File is going to have everything we need to pre-qualify you and understand what your affordability is. Maximize your deposit. Make sure that your deposit is traceable. So make sure that the money that's going into your account is coming from a place that we can track. Make sure that the deposit, we can see how it's been built up over time. If you're getting a gifted deposit, make sure it's a gifted deposit. Make sure it's not a hidden loan. Be open, be honest, be prepared when you're trying to get a mortgage, and make sure you speak to a mortgage broker. And if you don't have a mortgage broker or you don't have someone that can refer a trusted mortgage broker to you, make sure that you book an appointment with me. I don't charge to talk to you. I will provide you with a full mortgage capacity report that will give you all the information that you need to know what you can borrow now or what you would need to be able to borrow the amount that you want. Best advice, though, is I would say be realistic. If you are on a £35,000 salary and you're looking to buy your first home, not your forever home, maybe you can't buy in zone one a Victorian home with 4 bedrooms and a sweeping staircase. Maybe you have to start the way that maybe your parents or grandparents did. Maybe you have to start with that fixer-upper. You build, you get some equity in it, you build to another one, and then eventually you can get there. It's not my job to tell you how you should live. You're the one that has to work and earn the money. But I see it all the time. People have really, really high expectations, but it's just math. It's not an emotional thing. As much as I'd like to put everyone in a 4-bedroom home, some people may need to look at shared ownership. I do have a video on that. Some people may need to look at gifted equity, concessionary mortgages. There are other ways, but honestly, if your credit, your income, and your deposit do not dictate that you can get a £700,000 mortgage, that's just the math. It's not a conspiracy against you. It's not because banks don't want to lend or for your family to have the home that they want. It's just they want to make sure that when you get the home, you can stay in the home, you can be happy. So best advice, make sure you buy within your budget, make sure you speak to a mortgage broker. Make sure you tidy up your bank statement, check your credit, and be sure to try to avoid what you see in your WhatsApp groups and on TikTok about all the loopholes and all the cheats. You will see that 9 times out of 10, they are not licensed professionals. They are not people you can pick up the phone and talk to like me. They are just trying to get clicks. They make their money off clicks. They make their money off saying provocative things that you click, watch their video, and they make their money off that. If it all goes pear-shaped, for 10 years of my life, I did pre-litigation. I was the one going to people's houses saying, if we don't resolve this, you're going to get foreclosed on. So I take what I do very seriously. So don't get your legal, medical, financial advice from TikTok. It's a great place to get some theories and understand some concepts just like this video, but always speak to a licensed professional. Always be honest, be open, always do the right thing. My name's Anthony Lindsay, and I've been in finance for over 30 years. I'd love to get you a mortgage. I'd love to hear from you. My LinkedIn is there. My QR code is here. This video is not designed to replace speaking to a mortgage broker. I'm not giving legal or financial advice. I'm just helping share information about how mortgages work that you can make an informed choice for your mortgage or remortgage. Be sure to reach out, and thanks for watching.